The largest factor in determining the price of a property is the number of days it's been on the market. Days on the market are your enemy. Like the ultraviolet rays of the sun, the longer you're exposed, the more harmful they become. Every day your property is on the market, it depreciates in value, driving down the sales price. Days on the market are expensive. When your property has been on the market for a prolonged period, it reflects negatively on the property's condition and asking price, and increases the cost you incur while waiting for an offer, in the form of mortgage payments, maintenance, real estate taxes, and insurance. These costs add up to nearly 10% of the value of the property on an annual basis. If the property is vacant, it's more likely to deteriorate and drive down the value even further. Sellers must consider the time value of money and the loss of opportunity by having funds tied up for a long period. The longer a property goes unsold, the less profit a seller will realize from a sale, because the seller must continue to pay the mortgage, real estate taxes, utilities, and maintenance expenses. Selling a property today for $500,000 is better than selling the same property a year later for $550,000. The carrying costs simply eat up the equity and reduce the net proceeds to the seller when the property is sold. Selling a property sooner rather than later will ensure the seller capitalizes on the most beneficial sales opportunity and diminish the cost to carry significantly. This chart shows that for a $500,000 property with a $3,500 monthly mortgage payment and $1,500 in monthly upkeep, the annual cost to carry is $60,000. This chart shows that carrying cost decreases equity over time. This is known as disappearing equity. In just 1 year, a $500,000 property with $5,000 of monthly costs reduces the equity to $440,000. Statistical data indicates that the highest level of interest in a property comes in the first 30 days of when a property is placed on the market. The market value pricing of a property is the single most important item to consider when selling real estate by the traditional method. Therefore, it's extremely important that the property is priced correctly when first placed on the market to maximize interest. If the property is going to be auctioned, the buyers will determine the market value on auction day. Real estate investors, builders, and home flippers fully understand the urgency to sell an investment property quickly. Every single day that goes by without a sale and quick closing increases their cost to carry and decreases their return on that investment. Loan fees, real estate taxes, utilities, and other expenses add up quickly, and a property that sits too long on the market can become a losing proposition for the investor. The longer an investment property goes unsold, the less profit for the investor, if any. If a property is vacant, it will deteriorate much faster than a home that's occupied, which can drive down the sales price by as much as 20% per year. Vacant properties are also prone to break-ins and vandalism, as well as maintenance problems that can cause major damage and increase repair costs. That's why it's so important to quickly sell a vacant property in order to maximize its value. A seller cannot ignore the negative effect that time has on the value of money, along with the cost of lost opportunity. A great example is AOL stock, sold on the New York Stock Exchange. Some people who owned that stock when it crashed years ago saw it lose 90% of its value. Those who held onto it hoping it would rebound were disappointed when it never did. Others sold that AOL stock and invested in a little-known company called Apple. Not only did they make back the money they lost on AOL, but they also realized huge gains when Apple took off and became the technical sector giant it is today. Real estate and stocks are both investments and must be looked at similarly. Often it's better to sell a property that is not maintaining or increasing its value and to reinvest the proceeds into another property with a better chance of appreciation. Holding out and waiting for the market to bear a better selling price is often the wrong strategy. Human emotion can sometimes outweigh prudent business decisions, and selling real estate can be especially difficult for sellers who are emotionally attached to their property. This can cause them to miss out on the best opportunity to sell. To maximize the value of a sale, emotions must be carefully managed and separated from business decisions as much as possible. Time really is money, especially when it comes to selling real estate. Don't make a $50,000 mistake. Contact us today to discuss your real estate needs.